Hello all, welcome to Billionaire. So yesterday we discussed that once we break 17,047, we are going to drop on the downside. Unfortunately, we didn't break this low, but yeah, we got a decent amount on the downside or a decent correction on the downside. So the low Nifty made is somewhere around 16,860. So those many points are very sufficient for the expiry day. So yeah, this was the view that 1, 2, 3, 4 and fifth wave completed here, and A, B, C are completed here. So this is one correction completed. Since the fall was long, the correction will also be a bit longer. It won't go down that easily. So yeah, that's what our view was. And yeah, as you can see, after this break, after gap down opening, once you break swing low, assume that you are going to get some more points on the downside. So that's the idea behind the fall. So moving on to the next chart that we want to discuss. So simply with price action, you will be able to find out the reversal points. So here after gap down opening, you could see two bearish candles. Then when entire half day, it went down towards 16,860, and here you could clearly see a trend line has been formed. Or you can also check some short-term moving averages, plot of short-term moving averages on 5 minutes or 15-minute chart. You would see that 13 EMA, I used 13 EMA, so 13 EMA it was not able to cross. Yeah, so you have to wait for such moments, and once it breaks, you can look for reversal on the upside. So here you could see that it had broken here itself, gave a little more consolidation, then created a Marubozu. So this can be a trigger for the upside for you to identify based on price action. Here you could also see a MACD crossover. So yeah, this is how the market moved, and you could use this price action information for your advantage. Okay, next, moving next, we like you can also take advantage of option chain data. 17,000 was a major support initially during the initial drop. This call data started depleting. So sorry, put data started depleting, and call data was major until this point. After this point, the short covering happened, and the bounce back came. So next chart is like this. When I see here, I see that it is a more complex correction towards upside, and this is ABC move. So this is denoted by W later, as this is going to be a more complex correction. Here we do not see a proper ABC move, but we have to assume that this is A, this is B, and this is shallow retracement of C. C wave is quite short here, but yeah, that happens. We have to be ready for such things. So this is one way to represent, and we see here that this will be A move, this will be B move, and this will be C move. So tomorrow we can see that this support of 17,050 and 17,000 would act as a cushion for B wave. So B wave has already started. A, B, and C wave could come like this. It can open gap down, it can open flat and trade below this. That's what we have to expect. Upside immediately not expected tomorrow. So first we should come down a little, retrace little, maybe to this zone. If it again moves below this 17,000, it can very much go towards this area here, right? 17,900 to 17,000, sorry, 16,900 it can go as well. There's no doubt, because 17,000 is major support. So dip can come, and then it can bounce back. So until these levels are broken, this level and this level, so 18,060, sorry, 16,860, if it's not broken, or previous low, if these levels are not broken, then we are going to continue in this channel. That's what my assumption is for the next day. And once it breaks, once it completes this B wave, it is likely going towards C wave as 17,340, and maybe if it continues, if it breaks this channel, then look for 17,520. But most likely it will drop from these levels itself. So let's see how it moves tomorrow. Yeah, so I'm expecting break of this particular high. Then this high will be like it will go towards 17,300. That's what I can expect. So yeah, that's the third chart. So yeah, first two charts were just to show you how the moves happened and how you should use the price action to your advantage. And the next, this chart is tomorrow's projection. So the another alternative chart that I'm looking at is like this. So this is alternative. This has a low probability. I'm not assuming this chart, like I'm not giving much weightage to this chart. So here I'm assuming this is 1-2 wave as per the Elliott Wave Theory, and this is wave 3, which is very very big extended. So this scenario may not be properly fitting, because this is hugely huge extension. Okay, and this is assumed to be wave 4, and we can assume that this is wave 1, this is wave 2 of 4, sorry, 5. So we can assume and name them as a wave 1 and 2, and wave 3 will start tomorrow. It will go towards 0.618 Fibonacci or even beyond that. So for this confirmation, what we have to do is we have to wait for break of 16,835. Okay, so 16,835, if it breaks, then we are going on the downside. So that's what we can assume, and this will be a new impulse wave on the downside. So yeah, this is how we are looking. So this is alternative. We have less weightage to this. So this is only valid if it breaks 16,836. So don't enter the short side before this is broken. So we can very much likely be trading in the range for next a couple of days. So as I said, a dip can come as a wave C of B on the downside towards 17,050 to 17,000, and then a bounce back can come. So next to 1 to 2 days, we have to expect this scenario again, and we have to wait and watch for further dip before it breaks 16,836. We should not assume any more fall in the index. Now let's see the option chain data, how it looks for the next expiry. So this is a web bull, and on option chain I have used 3rd Feb expiry. So for next expiry is on 3rd Feb. So I have added that. Now here you would see that the major support for this expiry is 17,000 again, where 16.7 lakh put writers are there. Even 15.5 have been added today as well. So there is a clearly fight around this level itself, 17,000. And then you can see the major resistance is 18,000. And then the second major resistance, if you ignore this one, then 17,500. So this is how I look at the option data. So yeah, so tomorrow we should see some positive build-up, and this should get short cover. So call writers from 17,000 should start covering their position. That would push Nifty higher. So the next resistance is at 17,200. Okay, so a range could happen on the upside. So if we open flat or small downside, we see, as today was a sharp recovery, we had seen that it had bounced from 17,000 to 17,180 something. Yeah, right. So we have seen that level up move. So tomorrow also we can expect a flat to positive closing in the Nifty, and we can shift on the upside. So this particular call writers which were added today can get pulled, like can close their positions. That's what can happen. But yeah, at this moment, this is anyone's game. It can be a call or put side game. Like it can be a game of both buyers and sellers, as 17,000 has 15.5 lakh call writers and 16.7 lakhs put writers. So tomorrow, if again we are going down, if we break today's low, that is 16,860, if we break that, then again we will be pushed on the downside. So we have to be ready for both the scenarios. Watch for a break of 16,860 for the downside, and for upside, that low needs to be protected. Then the short covering can happen on call side, and we can push on the upside towards 17,200, 300 levels. So that's how we should look at the option chain data for the next expiry. So hope you like the analysis. So take care. Have a great day. Bye-bye.
This is just an educational video, not an investment advice. Do consult your financial advisor before taking any investment decisions.